Welcome everyone. We'll start our lesson 2. Today lesson will go through LO2 learning outcome 2. As you know me, my name is Anjum Sattar. Please, if you have any question, drop me email anjum@ukversity.co.uk and I'll try my best to get back to you as soon as possible. Today lesson key focus will be, it will go through the corporation tax and corporation tax return. What you know about is good to be reflect, and we'll discuss about indicative content. We'll go through the period of accounting period, financial years. We'll discuss about period start and end. We'll allowable trading profit. We'll go through property income. We'll go through chargeable gain, qualifying charities payment, calculate the corporation tax, dividend, short and the long accounting period, penalty, all will be our all discussion will cover all the indicative content and the key points. So please, we, of course, we are showing you different examples and different years we can, but we better to be apply the rates, which is grant year rates. So I included the rates for you here, please, which we need to look around. Like this year, we have a personal loan 12,570. We can look around corporation tax. We have 19%. We need to look around the cars, different sort of cars, individual saving account, pension limit, annual allowance is 40,000, minimum allowance is 4,000, income limit is 240,000, lifetime allowance is. So we've been given all, the rate of allowance is 100% expenditure exempt, so we can look around, start commercial structure and the building allowance 3%. We can look around the corporation tax is 19%. We can look around the asset, so we have a small profit rate and we have a man rate now is a 25%. We can look around the years like 2023. Upper limit is, lower limit is a 50,000, upper limit is 250 standard fraction, which we use 3 divided by 200. So we can say upper limit minus whichever augmented profit we have a time by the we can look around the fraction, standard fraction, which is total taxable profit divided by the augmented profit. So we can look around these, which is we look, so the quarterly installment, profit threshold, standard by VAT rates, those we can look around as well. Inherent tax relief, capital gain tax, which we can look around 10%, 20%, normal rate is 10, high rate is 20 on the capital gain. Residential properties, lower 18, and higher is 28. When we look the investor relief lifetime, we can look around, which we can 10 million, and the rate of tax is 10%. Business asset disposal, and we can look around relief on disposal of the asset, which we use, if we deliberately concede, we had a discussion all these. So we have previous year's rate as well, which I included 2021. So we'll start. Okay. Thanks for joining. We'll start our lesson. Today lesson will go through LO2, which is 2.1 is to discuss the tax laws and its implication on incorporated and incorporated business. When we say incorporated, it means registered company, corporation have a separate legal entity, and it has own credit scoring, it has own legal formalities, which we have a Company Act 2006 we follow, and we have a corporation tax rate is 19%, 25%. So we can look at our proprietors and the partnership company. The main difference between the incorporated and incorporated, of course, incorporated can be sole trader, partnership, and the corporated can be companies. So we can look around the payment of the debt must become from the investment of the business and not for the business owner. Personal properties is nothing related in this, we only looking corporation tax, which is mean related to the company, then the company asset and the company asset gain, company asset disposal. We not involve the individual. Individual is the is when we have an incorporated business, like a sole trader, partnership, incorporated, uncorporated, incorporated. So we can look around. The incorporated can be deferred the tax, the later date. The business qualify as a small businesses, qualify the small deduction. Incorporated business must file the separate business tax return. Unincorporated business owner can file individual tax return. So that's the key, the difference between need to an incorporated business. Some flexibility when dealing with the taxes. It can be claimed the personal tax, credit, that is the personal tax allowance. Incorporated businesses which can't, so also the owner of unincorporated business can use the losses to decrease their personal income. The cost of the incorporated operate, the initial cost of the setup, can be as lower to £60 to file the article of incorporation, but the fees depend upon the state. Add, the annual filing fees for the government, regulatory board, and the cost quickly increase. The business owner may also pay the considerable fees. The legal help, hire the lawyer to assist, with the setup and maintain the corporation. So additionally, incorporated businesses also pay ongoing maintenance costs, uh, can include in the more details in the accounting record, the financial statement preparation, federal and the local tax return filing, except, the okay, and the legal assistance, the professional tax assistant, owner of the sole proprietor companies typically don't incur these costs. Okay. In addition to the preparing, the quarterly and annually reports to the government, we can look around these. These are the crucial thing. As a consultant, as a practitioner, we have to keep in mind. Other difference between two unlikely incorporated business carried even after their own owner died, and other, can become unincorporated businesses, must be that retitle and draw the new deeds, transfer the properties. Corporation need to be issued the stock of the shares to the new owners, and also the greater, ability to money as the issue more stock. So we can look around, the corporation must be retained the transparent. Unincorporated businesses keep, skip the reporting and keep, their business activities private. So we can look around. That was the key, which we need to be look around incorporated and corporated business. What is the difference? Okay, so define the given data, the tax, capital tax payable are the chargeable gain. So we can, when we say chargeable disposal or chargeable asset by the chargeable person. So chargeable all asset unless is exempt in the UK, like, the motor vehicle for private use, that can't be, charged the corporation tax on, or the gain tax on it. We can keep it separate. The longer period of account, the calculation of the corporation tax, pro forma, non-trade profit, patents, realities, uh, charitable donation, and dividend. All we please, here is the link given. We have a plenty of example which I included, ACCA article to use and look around. The example on the article uh, Finance Act 2023, and chargeable gain is it treated like any other income, in include in the corporation tax assessment. Company don't buy capital gain tax. Company don't pay, the capital gain tax. The question will be normally give actual amount the capital gain, but maybe sometime require the candidate to calculate the figures as flow. We look, all the gain is the aggregated, is the total. If the losses are given, the either the same period or carry forward from the early period, the losses must be deducted from the aggregated gain. And of course, then the tax figures, which we can look around the capital losses that we deduct from the wrong income. Full mark cannot be. This is if you have exam based. Of course, you're doing assignment. Of course, within assignment, if you're not including the example, we can look around these. We have to address the criteria. So if we look the residency test, non-resident individual in the UK tax year less than 16 days, 46 days, uh, in any last 3 years, 91 days, and work full time abroad and the previous resident in the UK, one in last 3 years, and consider all 5 ties. So we can look around 5 ties, automatically resident, if in the UK 183 days, only home in the UK, and work full time in the UK. So we can look around, see the table which we can look around specific ties, close families in the UK, spouse, child, parents, accommodation in the UK used for the tax year, substantial work in the UK, day in the UK, last 2 years, 90 days in either years, and countries ties, most time spent in the UK, and not previously resident in the UK or in any of last 3 years. So we can consider the first 4 ties, and if these meet, so we have to look around. Okay, let's please we look, the tax liability in this case. We've been given the trading profit before, the capital allowance. We've been given the capital allowance. We've been given the bank interest. We've been given the rental income. We've been given the 10% debentures. We can look around donation, and we can look around dividend paid. So we can calculate the total taxable profit. So let's guide. So we can look around total taxable profit. So adjusted trading profit, like, the depreciation is a um, non-cash expense. Depreciation is not allowed for the tax purposes. We have to add it back. So we can say adjusted traded profit. So we have, adjusted traded profit. If we have the capital allowance, we can minus those, but not depreciation. So that's we've been given here. And then we have a non-trading interest. So bank interest, debentures, less, the bank interest if you paid, on the properties or others. So we have the non-trading interest income. We have the property income, which is given in the question. Qualifying charity donation, if you give the donation to the charities, you can minus those if the charity was registered in the charity commission. So TTP, so total taxable profit is 1,049,200, and then we pay the corporation tax, which is according to the rates of the year which is UDA. So again, we have other question. We can look around here. Trading income, we've been given the bank interest, we rental income, chargeable gain, qualifying charity, and these, all. And then we can look around in. So we can look the 12 months, and if it's any 3 months, so we can proportion it how much fall in different accounting. We looking the financial year, the accounting period can be different. So trading profit, capital allowance, total income, interest income. Yes, we can proportion it. If we have property income, chargeable gain, we can look around, and qualifying, the losses, any payments you done, so toward the charity, we can, and total taxable profit, and then of course we can calculate the tax, so we can look around if we have the capital allowance, which we can claim from man pool asset, or allowances, or short life asset. Those, we can overall we can calculate, how many months we can do the proportion as been bought, what was the rule, what was the under category the asset is fall, and we can look around total written down allowance for the year and in man pool and the total. Then we can calculate, the tax accordingly. Okay, so please, we've been given the 3 years example, which we can look around, and I included few examples for you different years, so we can look around and we can calculate, the tax liability. So like here, nil tax, if we have a losses, we can carry forward, we can relieve, so we can show how much is the liability which we have to pay in any tax period. Anybody, any question? So that's please quite good too. Then we have a 2.3 calculate adjusted profit. So we have our year 2019, Adam has the salaries, during is net income and the pension contribution 4,400. Item sold in the tables. We can look around chargeable gain. We can look around the years. B has the trading profit and so on. So we look item adjust item taxable income is 31,500. 44,000 less personal allowance in the years. No, this year was 12,570. If you apply the latest rates, so we can look around extended. So we can look around. So then if his tax rate band is extended, so we can look around if we have, his basic rate band is extended to 43,000. Why? Because we can look around, because if there be at source, it will take you back. Adam salary is a 44,000. Adam sold in Teak's table is and resulted as a capital gain of 21,000. Then of course B has in the tax year adjusted salary. So these are the three different. So when we look at Adams, so we minus the personal allowance, we look around 4,400 is if the tax being deducted at source, we can look around. Yes, so we can gross up these, and then of course, if any losses or things, so we can look around those, and then 11,500. So 43 minus 31,500. That was income is unused. So Adam capital gain of 9,000, 21,000 less annual exempt amount is the 12,000 is fully within the unused the basic rate band. So capital gain liability is 900, 10% that need to be paid. Okay, so that's the way we can calculate the B taxable income. We can personal allowance. We can typical gain her taxable. So we can look around how much 12,000 is. So is exempt. So 7,800. And if the tax was the higher taxpayer, then of course we have to look around the adjusted in that case. Of course, again we can look around 312. So now 31,000, 37,500 was the limit. 31,000. So the basic tax rate band is unused. So the capital gain liability of the adjusted, which we can look around 47,000 minus 12,000, which is exempt, and then 35,000 times. So we can look around 10%. So that's the way we can calculate the tax liability. And so please, in this case, you will see everyone's liability, and these are few examples. So exactly in the property income is include the income from the rental properties. It must, calculate the accrual basis, accrual concept, also known as the matching concept, which means it doesn't matter you receive the cash or not, but the tax will be due on the income. Okay, so that's we need to be look around. We have the augmented profit, the figure that determine the rate of the tax, and the rate of the tax is never applied to the amount. We always augmented profit determine the rate, but carefully apply the rate to the total taxable profit. So we have to look around the dividend. Dividend is of course will do after the tax. Okay, trading losses again we can set off in up to 5 years we can, and we can look around again the chargeable gain or chargeable. So maximum reduction, the total income greater than 50,000, 25% is adjusted total income, adjusted total income. so which we need to be look around. Of course, again, the previous tax years, first in, first out methods, like the losses first year first, and we can carry on claim. Determine the loss relief arising from the 12 million of the trade and overlap carried back 3 year tax years again the trading profit that can be look around. We can adjust, like here is the example 43,000 saving income and all, and Joe's implied deduct, that's been deducted at source. We can look around the employment income, saving income, dividend, interest, personal allowance in the years, and then we can look around how much was the tax chargeable, and then we can apply the tax, according to the rate of the year. Okay, so these are you've been given. I included the previous year links, and then please you've been given this year rates. We can look around what sort of the limited company we have, profit before less depreciation. We have accounting profit, but we have to add it back, depreciation. We can minus, then we can say adjusted trading profit, how much we have, qualifying plant and machineries, which we can look around always, capital allowance for these. We can use the annual investment allowance, journal pool, special pool, short life, and these, in the first years and all. And then 18%, 6%, you have to look around each year's that rate, and then we can calculate these rates. So maximum is 1 million per year. The time proportion can be shorter than the longer period. So annual investment allowance in the years was 200,000, and for accounting period, so we can proportion it. Yes, written down allowance 12 months. We can scale down, scale up allowance, which we can cause with the CO2 and their lives, and the rules for we need to be look around according to the Finance Act, whichever year you're using for your calculation as example in your assignments. You've been given here, please few is good to use them for the sake of your example. So 100% first year allowance is explained about the new car, and the second hand, the zero emission cars are treated as a car of the CO2 emission between 0 to 50, and no annual investment allowance and written down allowance. So CO2, which we can look around. So special rate, written down allowance 6%, first April, 8% previously was, so we have to look around the proportion of, and we need to be look around the asset, how long we kept, how long can be used, and the tax liability will be accordingly. So again, so I included the balancing charge, which is of the written down allowance if the asset being written off, single asset, depooling, and there are the plenty of assets. We can look around. I included please business success. You got closing business, cease business, and annual investment allowance. In that case, time pool, we can look around short or the long period, which we can beneficial of the asset, which is expected useful life less than or greater than. We need to be a short life, and the long life of the man pool assets, those we need to be look around the purpose of the short life. So because it's a different annual investment allowance applies, so written down allowance generally is 18%, special that is given. So we can go back to in our year, which is we looking 28 2023 Finance Act, so which we look in a minute, and I'll show you as well. Okay, so please, these are all the examples. It's quite good to go through special, and then we need to calculate the tax liability. Okay, so we can, in terms of course, it's plenty of slides included, a lot of examples. So what I'll do, I'll go through quick. I'll give you examples. Okay, guys, so this book is available our Moodle page, and a couple of you already access it in for other units. So please, you can look around the corporation tax. So like we done in individual and businesses unit as well for the tax for the advance. So you can look around the capital gain. Yeah, capital gain tax. Here is the corporation tax, please. Corporation tax, we can look around the corporation. Chargeable gain for the companies, losses for the group, if the group of the company inherent. So these are, please, is a plenty of examples, those we can use from this handout to look around. Of course, we can look around the man pool, assets, and the rate. So if I'll take you back to, and so hope you can see all. And if you look, please, in within the book, you've been given all the rates for the Finance Act 2023, which we look Yes, so please, here you look there, rates, supply these rates, accordingly. Of course, if you're a business, so we look the business rates. Under the corporation tax we have, we've been given the marginal relief, we've been given the man pool, uh, capital gain tax, annual exempt limit now instead of 12 is 6,000 now. For individual, we can look around for businesses. So these, the rates we can apply accordingly. So today lesson, we had a discussion about how we can calculate the business tax, and I included few examples as I demonstrated. So please, go through these, and the next lesson, in next week, we'll go through LO3. Anyone, any question, please, if you're not getting any point, you can drop me email at university.co.uk, and I'll try my best to get back to you as soon as possible. Have a lovely weekend. I'll speak you next week. Thanks for attending. Bye bye.